Good afternoon, ladies and gentlemen. For those who are joining the Africa Hotel and Leisure panel discussion, can you guys just join us? And perhaps fill in the gaps as well. I feel like we're a bit separate here, and there's a lot of gaps to be filled. All right, welcome to the panel discussion on the Sub-Saharan hotel and hospitality sector. My name is Mahlaka and I'm a journalist at MoneyWeb back in South Africa. And I will be the moderator for the session. Now, here's a bit of backstory about Africa. With economic growth expected to grow about 4% in 2016 for Sub-Saharan Africa, and the tourism sector is expected to rapidly grow in the region. What do these dynamics mean for real estate investors and specific to those in the hotel and leisure market? We've gone through a phase of the Africa rising story, especially in the middle class as well, and with that, greater consumerism in Sub-Saharan Africa. So what does this trend mean for real estate investors, and where can they find the opportunities and also be very mindful of the risks associated with this particular continent? So in this particular discussion, we will talk about the next booming region in Sub-Saharan Africa when it comes to the hotel and hospitality industry. We also look at where our panelists are finding the value and opportunities and risks at the same time. But let me introduce to you our panelists for this afternoon. We have James Parsons, who is the Head of Business and Development Hotels at STR. STR is the provider of data, information services, research into the hotel industry. James, thank you so much for joining us. And on his far right as well, we've got Olivier Harnisch, and he is the Executive Vice President and Chief Operating Officer for the Risiken Hotel Group. Now, the Risiken Hotel Group is one of the largest hotel operators in the world. So, Olivier, thank you so much for joining us.
Thank you for the invitation.
And lastly, and certainly not least, we've got Selim Bora, and he is the chairman of the Suma Group. Now, the Suma Group is a commercial real estate developer spanning into the hotel sector, retail as well. So, Selim, thank you so much for joining us as well.
Thank you, Ray.
Now, the point of this presentation is for it to be interactive, so you are more than welcome to ask questions into the session, but we're just going to go straight through to James's presentation, just to give us a bit of background on how the hotel sector in Sub-Saharan Africa is faring. So, James, the floor is yours.
Thank you, Ray, and good afternoon, everyone. So we're going to have a little overview of the hotel performance in the year to date so far for Africa in the slides. Not just Sub-Saharan Africa, but the whole of Africa. So we go through just a little bit about STR first. So STR provides benchmarking services to just under 55,000 hotels worldwide with 7.4 million rooms in 110 countries and just over 2,000 markets. So Africa, the great news is, excuse me, going up and down, Africa, what we can see here, what we're looking at here is occupancy in the blue line, ADR in the red line, and the RevPAR percentage change in the green line. And what we're looking at is 2010 all the way through to 2016 on a 12-month moving average. For those of you that saw my presentation earlier, this 12-month moving average removes the seasonality and really shows growth. And what we see, the great thing here is 50 months of positive RevPAR growth for the whole of Africa. And when we come on to see, it's really nice that the whole of the region is doing well, but there is some high points and low points, which we'll come on to. So where does that leave us at the moment? So Africa as a whole at 54.3% occupied, $103 for average daily rate, and just over $56 for RevPAR, which is a drop of 4.2% in occupancy, an increase in 8.6% of ADR, and a RevPAR down, up by 4%. Quick overview of the countries. As you can see, we have some red and some green across the map there. Obviously, the red in Sharm el-Sheikh Algiers, Tunis, obviously relating to some terror incidents that we've had in those areas, and some difficulty for Russians traveling, obviously, to Sharm, not allowed to go. We also have some green across the board in the bottom in South Africa, where performance is doing pretty well. And also some more negative in Accra, Gaborone, Harare, and Dar es Salaam. I think coming back to the slide that we saw earlier when talking about average daily rate across the whole of Africa, we do have some markets here which perform very strongly in terms of that. So Addis Ababa, as an example, sitting up at around the $190 average daily rate. Lagos also sitting around that $190 to $200 average daily rate. We're going to come on to the next slide now, which shows, sorry, excuse my slides jumping back and forth. How much branded supply is there really in Africa? And what we can see here is the very dark colored countries of Morocco, Tunisia, Egypt, and South Africa, which have more than 50,000 branded rooms in their supply. And what we mean by branded rooms is rooms that belong to companies such as Residor, of Olivier, Hilton, Marriott, Starwood, IHG, Accor, etc., etc. But what we can see is there are a lot of patches here where there is very, very little room supply at all. So some of the other countries there with very, very little branded supply, which shows that there should be, and hopefully is, a very, very large opportunity for, again, the big branded companies out there and companies like Selim's to really benefit and build hotels. What's coming up? So the pipeline for Africa is not enormous, but it does have some highlights. So Egypt, with over 10,000 rooms topping everything, mostly in Cairo. Angola, which has got a huge amount of branded supply in the pipeline coming in. I know Olivier has a few hotels coming in there, but also there's a lot of Accor hotels coming into that part of the world. We're bringing that down to a country, a city level. Again, Cairo and Sharm still have a lot of pipeline to come on board. Addis Ababa also with a lot of pipeline. I think if we look at the bigger companies out there that are building hotels in Africa, we've got Accor that have 43 hotels in construction, mostly in their Grand Mercure and Ibis brands. We've got Best Western with 13 under construction, 3 in final planning. Chancen has, I think how many was it, Olivier, in Africa, in the pipeline?
Currently in the pipeline, 32.
32 hotels in the pipeline. We've got Hilton with 76 under construction, apparently 20 in final planning. We have Hyatt with 15 hotels, IHG with 13, the combined Marriott and Starwood at 64 hotels also under construction, and Rotana, which is a Middle East player, with 19 under construction. So there's an awful lot coming in, but again, a lot of the pipeline that we see is going and sitting back into these markets where there already is branded supply. So I guess there is, if we think of the countries here, the only one with a very little that will have a lot very soon is Angola in the bottom left-hand corner. So in terms of pipeline, quite a healthy one, considering that it's still considered to be quite a tough market to operate in. And that was the end of the presentation.
Thank you so much, James. And just while sticking with you right now, there's a lot of data set that went into that presentation. Just how about do you get to those conclusions? What I mean is, talk us through the methodology of compiling such a presentation.
Thanks, Ray. So STR collects data from all of the hotels that are represented in this sample. And it's one of the things that we work very hard on is increasing the sample and collecting the hotel data from hotel clients, again, such as Carlson Residor, as Olivier well knows. We work very closely with the brands and chains, and part of that data and data collection is pipeline data, it is performance data. But it does provide a challenge because where we are strong is the chains, where we're not so strong is the independent hotels, where we work very hard to recruit them continually to make the sample data that much better so that people can really judge how these markets are performing.
So you largely rely on the hotel and hospitality sector. So in terms of which countries are you finding it to be difficult to supply you with the data at this point?
So several of our markets, we collect monthly data, which is what we present here, but we also collect daily data, which is what hoteliers tend to use for revenue management purposes. And actually, in some of our South African markets, this daily data is not that well trusted. So it's again a constant job for us to get that daily data and actually get the hoteliers to provide it and use it. Again, the lack of branded supply where we have strong agreements at head office level also is, if you guys hurry up and build more hotels, we'll have a lot more data in those markets to give. But alongside that, some of these markets are so underdeveloped, there just are not the hotels there to get the data from to supply with.
Yeah, yeah. And perhaps let's bring the hoteliers here. I mean, they're on the ground making all these investments. Olivier, let's, bring you in this conversation. So, I mean, as a Residor Hotel Group, you have a wide footprint in sub-Saharan Africa. But just looking at James' presentation about the lack of branded supply in the continent, as a group, where do you find value and the opportunity right now in the market?
Well, Africa is a continent. First of all, Africa is a wide continent, right? And we tend to speak about Africa as a whole, but Africa has 54 countries, which are actually quite different, right? But there's a clear undersupply of rooms, with the exception of very few markets that James has just shown, which makes it for us very, very interesting. We currently have 37 hotels operating in Africa, and last year we reached a sweet spot in that for the first time since last year, we have more hotels operating than in a pipeline. As I just said, we have 32 in the pipeline, 37 operating, and planning to open about 17 hotels in the next 2 years. So clearly a focus area for us. If you look at all our openings last year, we opened 25 hotels, of which 7 were in Africa, so almost 1 hotel out of 3. Wherever you look in Africa, you see opportunities. But the markets are very different. Some markets are quite mature, if you look at South Africa, for example, and some markets are really in development. The really interesting thing in most countries is the number of branded hotels versus the population. I was just recently in Lomé, in Togo. By the way, I grew up there. It's a market that I know very well. And I attended the grand opening of the Radisson Blu Lomé, where I spent my childhood in the pool, by the way. And this is where I first dreamt of becoming a hotelier. So it was great for me to come back 40 years later. But it's a city of 1.5 million inhabitants and has only 3 branded hotels. So in terms of opportunity and in terms of availability of rooms, there is still a lot to be done. So branded hotels is one thing. Then if you look at those markets, you will see that whenever there's branded hotels, it will usually be in the upscale sector. So we see cities with a good number of hotels, but still when you look at the mid-market segment, there is virtually no branded hotel. So again, opportunity coming.
Selim, Olivier says there's still a lot of opportunity when you look at the continent in terms of making those hotel investments. But talk us through the Sumer Group. What are you doing currently in the space? And with any opportunity, there comes an inherent risk. And as a Sumer Group, what risks are you factoring in when it comes to investments into the hotel sector in the continent?
Thank you, Ray. Our group actually is a diversified group with different interests. We are a real estate investor. We are a general contractor working internationally and in sub-Saharan Africa for the last 6 years. I guess for any investor, how much risk are you ready to take? So in our case, we've been brave enough, for instance, to invest in Libya. We are one of the first private company who invested in hotel business in Libya, and actually we branded as Radisson. We took over an old hotel from the government with a BOT scheme. We turned into a Radisson Blu. But as you know, the situation in Libya, how it changed. So We then decided to go further south in the continent, and we continued our activities in Equatorial Guinea, which followed by Senegal, then which followed by Rwanda, and now in Congo-Brazzaville. We are actively working in many countries, doing both general contracting as well as real estate investment, especially in the hotel segment. Each country in Africa, I find it the level of risk quite different from each other. Although they are neighbors, although they are from, apart from each other, but here the important thing is to find the real players in the continent, because there's a big appetite from all over the world, for about doing business in Africa. But at the end of the day, you find so little real players, operators, investors, contractors, who will do the real job on time with the quality. So I assume for the next 10 years, there will be certainly, I agree with Olivier, a lot of opportunities in the hotel business. And whoever the investor is should definitely check the environment specific of the country and try to be as flexible as possible, because sometimes you build a hotel, it's not enough to have rooms. You need to have the congress element attached to it, maybe a small utility apartment, a serviced apartment, residential, combined with a small shopping mall or a business center, which will make the whole development more feasible than you expect. So there are some issues.
Yeah. So what I gather is that political risk is top of mind for you, and the stability of the politics in various countries in the continent. But is there a market that both of you are not comfortable to go in right now? Maybe you can take it, Olivier.
With the exception of those markets subject to an embargo, UN embargo or US embargo, our majority shareholder is a US company, so there are restrictions on Sudan. But otherwise, no. We're willing to enter any market. Of course, any market has its specificities, but that's everywhere like it. Again, coming back to what I said earlier, Africa is one big continent with very, very different countries. But those countries have certain things in common, that's true. One of them is volatility, both from an economic point of view, but also from a political point of view. And I experienced it myself. My first GM role was in Madagascar. I was working for a different company. And I came to Madagascar in 2001, and that country had been politically stable for 20 years. And then after I arrived, elections happened 2 months later, and then the country was unrecognizable. It was not due to me, fortunately. But that shows also how quickly it can change. So you need to take a long-term view in Africa, and the overall momentum is positive in most countries. The growth rates are high. If you take Africa as an average, the GDP growth rates are about twice the global average, with some countries which are really standing out, like Kenya, for example, like Ghana, Ethiopia. They have some pretty high growth rates overall. Security is an issue in some countries more than others, but that's something you can adjust. And then, of course, there are local complexities, bureaucracy, which can take many shapes and forms, customs regulations, etc. But as Selim said, it's all about flexibility. So for operators coming from the Western world, it's a learning curve, quite a steep one. Residor entered Africa in the year 2000. So we have about 15 years of experience now. And we've learned a lot, and we've learned to adapt to the local situation and to have enough flexibility of mind to find solutions to every challenge that is posed.
And Selim, before I go to the floor to see if there's any questions, is the markets in the African continent that you're not comfortable with at this point?
Not really, because from the nature of our main business, which is general contracting, We have been working in many places. You can consider from risk category from 1 to 10. We have been working in Middle East. We've been working in North Africa. We've been working in Siberia. We are one of the top international contractors in the world. So for us, risk appetite is very high. But investment is a risky business. So, I mean, you cannot, neglect that one country is safe today, but can be dangerous tomorrow. It's always the option. So, I guess you have to be ready for any situation. That's why you have to be more flexible.
Yeah, and have a big risk appetite as well.
Yeah,
Is there any questions on the floor for now? There's a roving mic in the front, please.
Hi, my question is addressed to Olivier. I wanted to know what you feel the impact is of informal accommodation, specifically those providers that impact the middle market that you were talking about.
Informal accommodation in the sense of Airbnb, for example?
Well, not only that, but Africa, I'm sure you realize that they provide accommodation that is not in the formal hotel environment, that someone might open up in inverted commas, boutique hotel with a couple of rooms and provide accommodation. How does that impact your business?
That's a very good question. First of all, Airbnb really has an impact only in the more mature markets like South Africa, for example. It's not as relevant in many other markets. But yes, in Africa, there are nice private hotels. That's true. And coming back to when I was a general manager in Madagascar, to me, my revenue management was very simple. It was to recognize whether a guest comes for the first or for the fifth time. Because there is a certain apprehension towards Africa, right? And the Western traveler who comes to an African country for the first time will usually stay in a branded hotel, no matter what the price. After the fourth or fifth visit, they will recognize that there are also nice private hotels. So it has an impact, but of course, the private hotel business in Africa, I think, is a bit like everywhere else in the world. It's a bit of a Pandora's box. It can be very nice, but it can also be a surprise, a negative surprise. Does that answer your question?
Sorry, do you have any ideas or figures of these informal hotels or residences that supply accommodation? Any idea of that in particular countries in Africa? And which country perhaps is most prolific in that type of accommodation?
That's very, very different by market. The more mature markets have a higher percentage of branded hotel supplies. You look at Cape Town, for example, in South Africa. You will be at about 40%, 45% of branded hotels. We recently opened a hotel in Brazzaville, Congo. There you will be at less than 10% of branded hotel supply. So there, of course, the private sector has a very big impact.
And what about technology services like TripAdvisors, which give greater transparency to the hotel sector? I mean, I know more about your hotel before actually getting into your hotel through TripAdvisor. Has that sort of shifted the way that people visit hotels?
Very much so. And I would even say maybe even more than in the more developed countries, in the more mature countries. The reason being that most African countries don't have a robust star system, right? And so travelers will very much rely on TripAdvisor before they select a hotel. But this is where the power of brands comes in, because obviously if a traveler comes to Nairobi and books a Radisson Blu, they will of course pretty much know what to expect and rely less on TripAdvisor. They will look at TripAdvisor, but they will rely less on it than if they book a private hotel. To come back to your point.
Is there any further questions on the floor? There's one in the front.
Hi, I'm Jonas from Fraser's Hospitality. I have a question both for Selim and Olivier. It's about financing. We have several opportunities in Africa, and what we find the most difficult element of every project we have is to find investors who actually obtain the development financing. So maybe somebody has a land, but so you have the plot for the opportunity, but just finding the people who finance the whole development is difficult. So I wonder if you're experiencing the same problems, and maybe you can tell us about your experience with these projects.
Selim, perhaps you want to take that? The easy access to capital to finance real estate projects.
We do business actually both with governments as well as with private parties. In the case of financing the real estate projects and hotels specifically, there is, because we are a Turkish company, there's Turkish Exim Bank facilities which provide up to 80-85% of the total financing of the project, provided that goods and services are exported from Turkey. And the terms and conditions differs for each country if the government is borrowing. If the private sector is borrowing, they require a bank guarantee from a rated bank according to their risk analysis, and they provide those loans for up to 2 years grace period plus 7 to 10 years total period of payback time. So aside from this, there are also private investors who are looking for developers on their behalf to develop those hotels. And we have come up with a formula saying that forward purchase agreements. What we are saying actually, we can build the hotel on behalf of the investor, but we want to get paid the day we are turning over the hotel. So there are contractors like us who are ready to finance the whole project, but they are willing to make sure they get paid at the end of the whole construction period. This is a kind of self-confidence, you can say, because it's difficult to perform in this manner. But in our case, for instance, we operate in Senegal and Congo, Rwanda, etc. So we know that we will be able to deliver on time with the right quality, and we have done that number of times. Olivier knows here. So there are new models that I think will come up, especially for Africa, the coming years.
While we're still on that, is an example of a financing model that you would propose to get around this hurdle that you just talked about?
I mean, each country is a specific case. The land issue, starting from the land, the title, rights, and the government backup. I mean, how strongly the state is supporting your project is very important. Are there any issues with the title is very important, because you might build the hotel and a year and a half later, someone show up claiming that land used to be their grandfathers or their parents, etc. So for each case, you have to be very specific.
Just to add something, what we experience is that the group of funders in Africa becomes more diversified. So in the past, it would be mostly local, high net worth individuals or governments. Now we see much more international financing coming. Countries like Turkey, for example, are quite involved in Africa, China, the Middle East. Even we invest, not a lot. We take sliver equity in some projects. We partner with Scandinavian funds of the 4 Scandinavian countries, where we contribute a small sliver of equity to a project to get it fully funded. So I think that shows also that the confidence into Africa grows. Where there are still challenges, I would say, is when people have a short-term perspective. because of the volatility in many African economics. If you have a very short term, of course, the risk is higher than if you take a long-term perspective. So people who want to, or funders who want to exit very rapidly, find it more challenging than those who take a long-term view.
Olivier, so you're proposing investors to look in the long term, but in the short term, there's a lot of noise about the volatility in currencies and the downward trend in the commodity cycle, especially for regions like West Africa at the moment. So given that scenario, do you find value in the long term, whereas perhaps now there's a lot of noise in the short term?
Yeah, well, it's difficult to generalize because, yes, some countries are suffering from the low commodity prices, those who export, like Angola, for example. But then there are other countries which import a lot of commodities, and they, of course, benefit from the low prices. So, you know, when a market is stable, then take it a short-term view is okay because you know what to expect, or pretty much know what to expect within 3 years. Whereas when markets are volatile, then, of course, there might be a risk that after 3 years you're in a trough. And this is where the long-term view becomes more beneficial. But the rewards, if you're ready to do that, the rewards in Africa are, like in many other emerging markets, are really important, are really, really good. The risk-reward profile in Africa is really positive. And I think this is why we see an increasing amount of investment going into those countries.
James, investors like numbers, investors love returns. They love to see if they're getting more bang for their buck. So looking at that ADR rate in Africa, the average daily room rate that you presented, I think it was about $100 US. How does that compare to the likes of Europe and other regions as well?
Cool, thank you, Ray. So earlier today we looked at a little bit of Europe data, and the ADR there sitting at around the €100 mark, which again is not that far off. But again, I think, and again, the operators here would back me up on this, the profit and cost aspect of doing business in Europe versus doing business in African countries certainly is a different proposition, where you getting €77 RevPAR in Europe, but only $55 US in Africa. I guess that cost profit margin probably is not, well, I don't know, I'd ask the man who operates in both areas, which is the better, they both carry margin, but which is is more expensive to do business in Europe, or maybe perhaps set up and build cost is higher in Africa? Or
no, the margins in Africa tend to be higher because of the important factor of labor cost, which is, which is, as we all know, the biggest cost factor in Europe. Then you have import goods, which are more expensive in Africa overall. But if you look at an average, hotels, especially in the upscale sector, tend to generate higher margins in Africa than in Europe.
Is there any further questions on the ground?
To go back to my notes, sorry. Oh yes. How important is it to have partnerships locally when you're investing in Africa?
That's a good question.
Partnerships are very important, but it's not a must. It's not a must. I mean, we prefer usually to create our own investment proposal to the governments that we are working with. So if the projects are interesting for them, they usually give certain privileges or priorities to your project. And we try not to partner with the parties locally unless there is a need for that.
Then if you don't partner with the local guys, where are you getting the expertise then about expertise and knowledge about a local country?
There are international investors already existing in those countries, multinational investment groups, etc. So by meaning local, I'm not saying that 100% citizen of the country, but they operate in that specific country. Then yes, we try to cooperate with them and see how well we can manage together.
Is there any further question? There's one in front.
To Olivier. Firstly, can you confirm the $100 average rate on the upscale rooms that are in Africa? And secondly, what would you define as your single most important market in sub-Saharan Africa? Which countries?
I can confirm the $100 average rate, and in some cities it's much, much higher than that. Again, it depends on the supply situation, but in some markets it's easy 3 times as much. Our focus countries are Nigeria and South Africa, and then we have countries which we look at proactively, which are Kenya, Ghana, Tanzania, Mozambique, Angola. Yeah. And then a lot of capitals, which we also look at. Virtually every capital we are interested in Africa.
Is there any question? Which city gives you the most growth?
Which city? In the long run, we've had the most stable growth in South Africa. Cape Town, yes. Johannesburg, also not far behind. And in other markets, it has been more of a patchy growth and then temporary decline. Mind you that even though we've been in Africa since 2000, most of our hotels have opened in the last 3 years.
Is there any further questions? All right, perhaps from both of you, Olivier and Selim, what's your checklist before going into a new region in the continent? What must the market present to you to be able to justify your investment in any particular sub-Saharan Africa country?
From our case, we would like to be the pioneer in whatever business we go into. So it's even a shopping mall development, it's a hospital development, it's a hotel development, business center development. We try to be the first in the market in order to benefit the most. That's our criteria.
Olivier?
For us, it's not so much different than in other markets. We do our due diligence. Again, we don't really invest, except for those small percentages of equity in some projects. But we do a thorough background check on the owner. That's important. But we do that everywhere. And then we look at the political situation, the supply situation, security, safety and security, intricacies of the country. Is imports, is that a tricky thing? How about labor, the availability of labor? Because one of the great things in some markets in Africa is that as an operator, you do more than operate a hotel. It's very often, there's no or very little, for example, technical training. So when you're the first international hotel that opens, very often you associate with it a whole training program that comes with it. So all these are the things we look at, but they are no deal breakers. With the exception of embargoes, we would go into any country in Africa after having checked our checklist.
And I see we're sort of slowly running out of time, but also just as a parting shot, perhaps Selim, Olivier, and I'll come back to you, James, specifically, but what do you want the world to know about Africa and sub-Saharan Africa as an investment destination? Is it a stable market to invest in? What would you want the takeaway to be from this discussion? Let's start with you, Selim.
I think any investor about Africa should try to find the right partner to work with, because delivery is the key issue in Africa. Many people promise, but they cannot deliver either on time, either on budget, either on the quality they promise in the beginning. So they have to find the right players, which is not, unfortunately, too many. But they have to make a really good search before putting the hand under the stone, so to say.
So know the market you're going in, thoroughly know it. Yeah, and Olivier?
Well, I have a couple of takeaways.
Sure.
First of all, great potential and excellent risk-reward profiles, and then touching on what Selim said, you need to have a certain flexibility of mind going to Africa. First, again, it's 54 countries, 54 very different countries, and stability, not always. So you need to have this flexibility of mind, and you need to have a robust structure also to deal with delays. One thing we face in Africa, for example, is that hotel construction takes longer than in some other regions. And then it's great to have a partner like Suma, who has great expertise in Africa and really delivers on projects, but it's not everywhere like that. Then funding often becomes an issue also during the project, because projects then end up being more expensive than initially planned. So you need to have a plan B also on how to close a gap that very often arises. So, but all this to say that if you take a long-term view, then most African countries are a great go from a hotelier's perspective. Low supply most of the time, great potential demand for the future. Tourism growing, countries which are extremely proactive on the tourism side. I mean, just go to ITB, for example, look at some of those stands that the African countries are building up. They're getting bigger and bigger and create more and more creative. And this is really a sign that the governments are supporting their tourism industry. So overall, a really positive story.
And lastly, and not least, James, this data that you presented, how do investors in this room use it? Is this a starting point to get knowledge about the continent?
Well, firstly, I just wanted to add, it's clear from both Olivier and Selim the passion that they have for this market, but that passion is also clear from some of the other big companies that are out there in terms of the positivity that's out there with those other companies that have these huge pipelines out there. So there's obviously, these companies are big for a reason, and they have the size of pipeline they have in those countries also for a good reason. So again, from our perspective, very, very positive in terms of where those markets will be. We just hope that a lot of them are using summer to get these projects completed as quickly as they can. Finally, yeah, our data is available. We constantly work on our sample to make it better. And again, we do struggle a little bit in some of the African countries and capitals, but the data there for average rate, occupancy, and revenue per available room is available to buy, and that will tell you all you need to know about the strength of the markets over the past few years. Again, I don't really want to make this a sales pitch, it's not the point, but I really want to make this a positive thing, and I think we're there.
Yeah, and my takeaway is that the short-term headwinds, but the long-term looks very promising. And there's definitely a lot of opportunities, but also be mindful of the risks that are involved. But thank you so much to my panelists for just giving us a description about the continent and the various opportunities that lie. Thank you so much to the audience, and enjoy the rest of the conference. Thank you so much.